Alright guys, we are live. It is 11 o'clock p.m. Eastern, 9 o'clock p.m. my time. We're going to be taking a look at price action for today. I know I haven't been live lately, and that's something I need to work on. Oh my gosh, my hair's going crazy. But I just think, it's important to go live and review the market. That's one of the most important things. I mean, the most important thing being live trading, but at the very least, we should backtest as well. So let's go ahead and jump right into the charts, review price action. Like I said, I wish I was trading live for you guys. Big reason I haven't been is because I am going to put more funds into the account probably next week, and so I just kind of been waiting for that. And I've been trading on paper in the meantime. But with that in mind, I still think that I should be live trading. So that's my bad. Sorry about that, guys. And I do want to consistently be in the market live trading for you guys every single day. So I'm going to work on that. But we're going to review price action today. We're going to pull up TradingView, and for some reason it's glitching. And we're going to review price action here. See what we can learn from today's price action. Today was actually super clean, by the way. I did paper trade some stuff. Got some nice paper trades. I mean, I was kind of half asleep, but I did see some nice trades. Everything was very logical from the beginning of market open, even pre-market to later in the market. Every move that happened was very logical. I will explain everything in detail. But it's like, even though I caught a significant amount of the moves, but even though I didn't catch every move, I still was able to understand logically, oh, that's why we went lower. That's why we went higher. In this specific instance, that's why we went lower. And once you can start to do that every single day and really conceptualize like what was the reason, I mean, it's just a matter of time, you know what I mean? And that's where I am getting to the point of, or at least that's where I want to get to. So let me show you what I mean. So first things first, right around market open, we push up into this new day opening gap. You can see how the market responds to this. Clearly, this is hard to ignore, right? Bang, pushing up into this new day opening gap. And then we get an inversion for value gap off of this. When this happened, I actually did take this on paper. Once again, I am just paper trading for now, but this was a very simple trade. We had the new day opening gap, and then let's get rid of true opens for just a bit. Let's get rid of S&Ts. Let's get rid of actually everything, because once again, we are backtesting right now. It's not that helpful to have all that. That's mostly just for live trading. Okay, so, and actually we'll pull up ES and YM as well. So let's pull those up. And we can actually look at NQ instead of MNQ. So, dragging this over. Here we go. So, where's the new day opening gap, guys? It was right here. You can see how the market comes up right into this new day opening gap and rejects it. That tells me what? That this inversion for value gap is going to be super nice. I took this on paper, once again, on paper. So, unfortunate that I'm not making money off of that, but I took this on paper. I took this down to probably like this low. Very common sense type of trade. And once again, the reason being just instant V-shape inversion of this old fair value gap here. Bang. And then we were delivering from a new day opening gap. And we might have even had SMT. I'm not super sure, but it's not like absolutely required. So bang, we get that inversion. I could tell we were going to go lower. You can go break even at these lows. You can see that break even point does not get hit. And then we continue down to this external low here. So bang, mark that out. So this would be your TP. And I will show you guys that I did in fact take this. I can go over to my Trade-Evade account that I have on paper, and I can show you guys that I did take this. Once again, not live trading right now just because I'm taking a little break. The unfortunate thing is I took this short, and to risk 1 micro, I have to have basically a not full stop loss, and I did that on paper, and it ended up working out. But I don't know. I think that's fine to do. Anyway, the stop loss is supposed to go like here, and so you can see how that would have played out differently. Anyway, there we go. Bang. Once again, I had to take the trade like this because I could only take it on 1 micro. And since this is NQ, not MNQ, this is going to be 1/10. So 1 micro is stop loss of right here. But anyway, it's supposed to be taken like that. And bang, down to that low. So very logical trade here. Like I said, I took this. I can show you guys on my other screen here in just a second once it loads. But the beautiful thing was we were delivering from near the opening gap. Instant V shape right at market open. And LRLR run here. So I'm trying to get back to it so I can show you guys. Oh, dang, it's not, the arrows are not still showing up, so that sucks. Okay, anyway, I did take this. And yeah, we reject that and we go lower. So there we go. Very simple trade. Once again, having this nice LRLR as a confluence, you can go break even at the end of this. So like something like this, and you can see that you would not get break evened out because by the time that we come up to retest that, well, there's no break, the break even spot's not hit. So bang. And you can see we continue lower. Well, another beautiful thing that happened is when we came back up, and maybe I should talk about the move up too. Yeah, I'll probably take a look at that in just a second. But this was actually a rejection of the first presented fair value gap, which is right here. It is the gap between the 932 candles low and the 934 candles high. You can see there's the fair value gap. This gap right here is the first presented fair value gap, and we do in fact reject it beautifully, right? So we can take a 15-second change in state off of this and get incredibly nice accuracy. Once again, that is my first strike model, and I really do love it a lot. So, but even if you didn't take that as a change in state off of it, we do have an outside bar. And so I'll get into all that in just a second. So, once again, 1 minute inversion for value gap. Beautiful delivery off of this new day opening gap. Let's actually get rid of that. Bang. So yeah, delivering off the new day opening gap, 1 minute IPG, and then we deliver to this external low. All this being low resistance. And once again, I did take it. I am just on a break from trading live, so it wasn't real. Alright, so there we go. That is exactly how you could take this trade. Once again, I took this on with 1 micro, which means I had to have a stop loss like that. I think that was okay, but definitely more of an aggressive version of the trade. Okay. So here we go. Let's go ahead and screenshot this. This was once again a 1 minute inversion for value gap, delivering from a new day opening gap. Yeah, we might have even had a lower time frame pin bar or something, so off of that end dog. So that's something I want to look at actually. Before we get into that first presented for value gap trade, I kind of want to look at that, because that will be valuable for the future. All right, let's go ahead and save this into the folder for today, which we still need to make. So December 18th, 2025. Today was a Thursday. Let's go ahead and drag this over. And bang. So 9:33. So if you guys ever want to see how I notate these, I do the time, then I do the trade type, then I do the time frame. And then if there's any additional notes, I'll put them in there. So, okay, so what next? So I do want to see if we had some kind of pin bar or anything on the low time frame off of this, because that would be a beautiful trade, and it's something I want to observe for the future so I can be able to take it. Might have been like a 15-second pin bar. Yeah, guys, look, I mean, well, I guess it's not the most obvious thing in the world. Yeah. Okay, it's not really obvious enough. But we do end up rejecting that new day opening gap. Let's look at that first presented for value gap trade next. Or do we want to look at if there were longs within here? What do you guys think? Yeah, because we obviously had SMT with this low. Okay, let's look at longs, and then after that we can take a look at the first presented for value gap short that occurred after. So we ended up getting SMT with this low. We do, let's see, 730 true open is all the way down there, so we manipulate that over there. You can see that we use this rejection block on the 1 minute very nicely, which is, once again, what is a rejection block? It is the wick of a swing low. So it's going to be, when you mark out these this swing low, the wick of the lowest low, it can be either red or green, it's going to be the rejection block. And so the market's going to be very sensitive when there's SMT with this. So something to remember for your notes. That is Phoenix model. And yeah, we end up using that right there. Bang. Hey, what up, Jill? Dude, we're just locked in. So there's that rejection block. So you could have taken that as a Phoenix. We already know that though. I don't know. Okay, fine. I'll mark it out as Phoenix real quick. It's just going to take a second. So yeah, once again, we'll just have an SMT with that low. Bang. not gonna be lazy. I'm gonna mark out everything I see. Just goes to show the potential if you can just catch one of these. If you can just catch one Phoenix trade, the potential is crazy. And you could take it up to this high. Something like that. So we're going to screenshot that. Phoenix off of that 1 minute rejection block. Right at 9:49. It's valuable to note that's also a pin bar, right? It's a pin bar. We can utilize that for longs. So even if we don't get in on the Phoenix entry, fine, we still have a pin bar there. I think that's actually why FA went long there, because in his notes, FA did go long. Or in FA's trade journal, he did go long here. My guess is it was probably right on that pin bar forming, and then also like when we retested it. That's my guess. So let's mark this out as 9:49. Phoenix on the 1 minute. But yeah, we could actually look at this pin bar next, actually. So we get SMT with this low, and beautifully we have a pin bar that forms with SMT, and this is going to be very, very strong. So remember this for the future, guys. So we can enter right on that close or the retest from what I've seen from my back testing. That's not like officially approved, but that's just my intuition telling me that. So 1 minute pin bar, and then once again, let's just say that we entered this on the close. Or maybe we want to do the retest. I don't really know. It's not that big a deal. And then let's say we targeted 2 to 1. So there's 2 to 1 right there. Beautiful trade to 2 to 1. That's 2R. I think that's how we'll frame the trade. It's just like that. So bang, 2R off the pin bar here. And this is on the retest. This is also going into the macro. So that's pretty nice. So macro time being 9:50 to 10:10. Let's go ahead and screenshot that. So there we go, 9:50 pin bar on the 1 minute. We could also enter, let's just say that we entered right on the close of the pin bar. Then we would get a little better RR, 2.5R. So that's kind of nice. Just kind of depends also where you would take profit. As always, you can scale out. Okay, so then what happens next? So we could take a look at the rejection of the first center for value gap. That's an interesting thing to look at. There's also this inversion for value gap on the 30-second. There's literally nothing bad about that trade on the 30-second with the inversion. So we'll record this 30-second IFEG because this is very textbook. Nothing wrong with this. Where we have an SMT with this low. Note we're also delivering from a volume balance, right? And then bang. So just remember the signature and price. When we sweep out a low and then inverse a gap like this, this is going to be one of the strongest signatures that there is in the market. Super, super textbook. And then, yeah, we go higher off of this. Look at that beautiful delivery. Look at that closure. That's on the 30-second. So there we go, 30-second IFEG, 40-day IFEG. That'd be crazy. Nah, 30-second. Okay, and then we could just target this little consolidation here. We can volume profile this, kind of figure out, okay, where's the liquidity? Honestly, I would probably just target this range, yeah. So I would just target within here, and then bang. Right there's where we can take profit. Perfect. So we do end up delivering up there. So there we go. There's almost no drawdown on this trade, which is super nice. This is one where you could even get kind of aggressive on this one if you wanted to with conviction, right? If you have conviction that we're going to go higher, maybe you take the trade like this. I mean, guess it's all up to personal preference, honestly. And then you go break even at this high. Once again, it depends on personal context. I think most of the time, most people will go break even or put the stop loss down there. But yeah, it's kind of up to personal preference where you actually put that stop loss exactly. So there we go. Break even, right up to that. So 952. 30-second inversion on the 30-second. Okay, and then this as well as a Phoenix on the 30-second. It's its own Phoenix because we have SMT then there, and then we retest the rejection block. But I'm not gonna mark that one out. It's fine. I mean, I could. You know what? It's probably worth it. Let's just mark it out really quickly. We also had true opens that we manipulated, so manipulation of there's 922 all the way up here. It's another good reason for why we reject the first one for value up there. And then we have another true open down here, being 951. I think. Well, that's crazy, actually. Wait. This is the 951 candle. Wait, that's insane. 951. Open, rejection block. Wow. That's actually really, really precise. Do you see what I'm saying, guys? We got 951 as the true open. We opened, formed the low at the rejection block with S&T, and then we go higher. So yeah, that's beautiful. This song is good. Crazy. Phoenix on the 1 minute, 951. Now let's take a look at the cool trade, which is the first line for value gap rejection, which I think was probably the easiest, most beautiful trade of the day. I tried to take it. I did not actually catch this one. I messed it up. But in hindsight, this is so obvious, guys. Once again, it's like I'm able to observe it. It's just refining the execution. I'm able to observe it live. It's just refining the execution over and over till I stop messing up. What up, Keisho? How's it going, bro? So you can see here we have the first presented for value gap. We are above the 90-minute true open. We can go down, see where was the most recent 22-minute true open. Drop down, we had 928, we had 951, then next one is 1013. Okay, that's not till way later, so we're going to be using this one. And so we're definitely above that. And, not to mention, we are above midnight as well. So we are above quite a bit of true opens here, which makes the case for at least a short-term retracement. We had the first presented for value gap. Also, how's Nepal, bro? Hopefully you're doing good. It's good to see you again. So let's make a note of this. We are above every single true open, which makes the case that with a sensitive key level as strong as the first presented for value gap, we should have at least expected somewhat of a retracement, because I mean, we are above every single time-based premium and discount level, and then Here we go, 15-second change in state. This is about as textbook as first strike will get, guys. 15-second change in state right here. You guys see how we go 8 projections off of this. This is about as textbook as it gets. We might even have had SMT as well. Let's go ahead and take a look at that. Once again, I did notice this live. I kind of messed it up. I'm just going to be real with y'all. I did see this happening live. I kind of messed it up, but you can see it clearly occurring. This is also probably at OTE. You can see that there, right? We have OTE of this displacement leg. Bang. So anyway, rejection of this first one for value gap, 15-second change in state, above every single true open. We can make a little note here. Above midnight and 7:30 as well. And let's make this a little smaller. Textbook, guys. Textbook. This is in the Jake Trades It textbook right here. 15-second change in state off the first time for value gap. And if you're not confident in that one, you can wait for this one, and it's still a good trade, right? This is still a good trade off of this one. But anyway, bang. Short on that retest. Kind of scary. Because we could have, we could have swept out the low and then gone higher, and then you wanted to have taken the one to the upside. There's definitely a case for that. So, but I think it becomes a lot more clear once we break this low again, and so you could have taken this change in state if you wanted to instead on the right hand side of the curve. So even if you were unsure with this one, you could have taken the next one, I guess, is what I'm trying to say. So let's just say we project this out 8 projections. You'll note this is also a 15-second pin bar, which is kind of cool. So there we go, 8 projections down. Bang. So yeah, this is also a hand of FA trade, which I nicknamed because we have a 15-second pin bar there. It's very, very obvious, and then we retest it. So not only is this first strike, but it's also a 15-second pin bar off of the first one for value gap. And it's also a 1-minute outside bar. There's a million ways to take this, and I'll show you guys all of those. This one's probably not even the most obvious, in all honesty. So, once again, this is one way you could take this. Maybe not the best way, but it is one way. On the 1 minute. 1 minute aligning with the 15-second. Once again, you could have waited for this one instead, which also would have been fine. This one probably would have gone for 4 projections instead, just because, I don't know, it just doesn't look like it's going to go 8 projections. But as always, you're going to be scaling out anyway, so it's not like it matters. So another way you could have taken that. And then, oh, it's funny you said good morning because it's nighttime for me. So there we go. First strike, 10:03. First strike. Once again, 1 minute aligning with the 15-second. Then we can also take a look at this pin bar. So we had a pin bar on the 1 minute, on the 15-second off of the first strike. So I call this anytime you have a pin bar delivering from, or a pin bar or an outside bar delivering from like a first presented for value gap, a new day opening gap, or like a Reaper gap. I refer to that as I just nicknamed it the hand of FA. Because FA, if you guys don't know, FA is my friend who's like a super rich trader, and he trades pin bars and stuff, and so I just nicknamed it that. So pin bar on the 15-second, and then we deliver lower. Bang. Okay. So 10:02. Hey, what up, Javier? We are here. We're back at it. we ain't giving up. This is a hand of FA on the 15-second aligned with the 1 minute, because we had a pin bar off of the first presented for value gap. It's also a hand of FA on the 1 minute because we have an outside bar off the first presented for value gap. So let's go back over here. You guys can see this is an outside bar as well, because we had the old candle, the high and the low of the previous candle gets taken by the sequential candle, or the following candle. Both the high and the low get taken. So this is an outside bar. I would just enter right on the close. This is on the 1 minute. And yeah, I'm aligning a 1 minute first presented for value gap with a 1 minute outside bar. Guys, once again, with this like hand of FA trade, these hand of FA trades, I don't think it's that important if it's like the exact aligned time frame. So yeah, 1 minute outside bar. I'll just enter on the close there, and then stop above the high, and probably just take this 4 projections. So above every single true open. See how the true opens just kind of always play their role? It's like crazy. And then, yeah, once again, I understood conceptually like why the market did every move that it did throughout the day. And it's just a matter of time before, I can really execute on that live. Sometimes I might have the idea, but it might not be exactly clear, the execution, and that's just something I'll just keep getting better at, And I did execute some of the trades really nicely. 1 minute aligned with the 1 minute. Number 2. Okay, yeah, bro, I'm going over about ATR. FA mentioned, I kind of forgot about it, not gonna lie. ATR, I bet, honestly, I would not be surprised if that's important, because it's kind of like stat map. It's just the statistics, like on the most recent candles, like what's the average of the true average range of a candle. So, I mean, it makes sense to me. I think that stuff's helpful, very helpful. So yeah, we ended up, man, once again, guys, every single move, down, up, then down, made sense throughout the day. At the end of it all, though, I did essentially know that the higher time frame was bullish, because you can clearly see here that we had, let's look at the 5 minute, because I think it becomes pretty obvious. Yeah, we had this entire range above that was kind of like not tapped into, and we were just displacing upwards. So I thought, at the time, that we should at least hold this 5 minute gap and then continue higher. So I could have framed a flow state off of this 5 minute gap. We could maybe take a look at that next. Yeah, let's go ahead and look at that next, because I think that was a pretty reasonable idea. If I profile this entire range from here to here. Yeah, we kind of have a volume hotspot up here, which has kind of already been tapped, but it'd probably need to be retapped. So 5-minute gap, and then 30-second change in state. Oh, did I ever talk about that pin bar? Did I ever talk about that pin bar on the 1 minute? Let's see if I did. Yeah, I figured out FA's trade from today. It was this pin bar with SMT, and it doesn't get more simple than this. We just had SMT with a pin bar, and then we swept out a low, and then boom, retest that pin bar up to projections. And then as well, if you wanted to enter on the close of that pin bar, you could have done that as well. That would be 2.58R instead of 2R. So, kind of nice. Anyway, framing this as a market maker buy model, we have this 5-minute gap as our higher time frame key level. We have SMT with this low from over here, I think. Yeah, SMT with YM. So here's our SMT, confirming the bottom of the market maker buy model. We have the 5-minute gap. So accumulation, manipulation. I mean, it just makes so much sense. Like when you look at what happened, you're like, oh yeah, that makes sense. That makes so much sense. Why it happened the way it did. And I'll go in more detail in just a second. Once I get this fully framed here. So, once again, here's our higher time frame key level, and you might be laughing at me. You're like, higher time frame, 5-minute for VIGAP? Bro, that ain't higher time frame. And yeah, it's not, but I knew that that was going to be the key level the market was going to refer to for the buy model. That's kind of, that's the point I'm trying to get at. So, this whole thing, accumulation, bang. Then we sweep out the low with SMT, manipulation. And then we utilize both true opens. Once again, not 730 because 730 had already been manipulated over here. So it didn't need to be manipulated again. But when I say both true opens, what I'm referring to is the 90-minute true open. Let's actually make sure that that's the case. Hold on. 1052. Yeah, that's going to be way off to the left. So we have 922 right here. So there we go. That gets manipulated. Then we have 22-minute true open within this 1013. Yeah, guys. I mean, I don't really see these true opens not be correct. I mean, I think the market the algorithms that run the market, they refer to true opens. They just do. They just do. I've seen it too many times to deny it. I mean, 10-13, then we take out both of them, and then that's when the expansion begins. It's crazy, man. This song is good too. So I would mark this out as a change in state. Genuinely. I think that's valid, bro. You could also mark this out as change in state. It's not that big a deal. It's not that deep. And the most beautiful part of it all is we have SMT with this low. Unbelievable. Unbelievable. So. So, market maker buy model. You guys see it? Accumulation, manipulation, change in state, off this 5-minute gap, delivery higher. Did we utilize any key level here? I'm so curious. Like a first limit for value gap or a new day opening gap. Nah, it's not looking like it. Alright, I'm just going to screenshot that. I'm not even going to mark the trade out. Because it's just going to take up too much space. Actually, you know what? I will. I've taken a trade like this once. And it was on demo. But it's just kind of cool that I have taken this before, you know? $10.13. Flow state. 5-minute aligning with a 30-second. That is nice. Not necessarily a trade I would take, but it's just nice to be able to frame the models and learn from them. Once again, not the most obvious trade in the world, but I like to mark out flow states because I like to be able to frame the entire market maker buy model or market maker sell model and then learn from it. And then honestly, guys, once we got back up to those highs, I saw this happen live and I was just like, yeah, bro, we're not going to get anything else. I knew it right then and there that we weren't going to get anything else. And I was so right. Now, was there anything in the afternoon? That's the question. Looks like we had an SMT, maybe, with YM. It's kind of unclear. What about with this high? Oh, man, this is kind of unclear. We for sure had SMT with this high. So at the very least, we have SMT with this high. Oh, but we had bullish SMT too. That would have been tricky. That would have been tricky. But yeah, bearish SMT with this high. No, we probably even had like a 15-second sell bottle or a 30-second one, like a 2022 bottle. Yeah, man, look at that. Look at this beautiful, beautiful 30-second sell model. Look at the way we get a sweep of these relatively equal highs with SMT. That is beautiful, man. That is beautiful. This signature, you're gonna, guys, if you can just learn 2022 models and when they are gonna happen, you will be set for life. Because this is, it'll happen on low time frames like this, like on the 30-second. But we will sweep out. Here's all these relatively equal highs. Bang. We'll sweep them out. We have SMT with that high from over here. And then we get displacement below an old low. Tanja Trades took this exact trade. Crazy, guys. And there we go. Liquidity sweep with SMT. We break this low with displacement. Keyword being displacement. Once again, I only care about displacement. That's all that matters in the 2022 model is, was there displacement? There was. Perfect. Okay, now what we're looking for is a fair value gap. I will mark it out like this because this is where the true imbalance in price is. And then we just go lower. It's that simple. I mean, guys, insane. Insane. When we can mark it out like this, just to do it. But still, insane. How precise these markets truly are. So once again, you might be wondering, well, we didn't come back up to equilibrium or OTE. It's like displacement. Keyword displacement. If there's displacement, I might not even want to see equilibrium get tapped at all. If there's displacement, I might not want to see equilibrium or OTE get tapped at all. I might just want to see us go lower right away. And that's something that's going to repeat itself in the market over and over and over again. So there we go. And then we go lower. We can project this out. This is one where maybe you want to be aggressive. Maybe you say, yo, I think we'll go 8 projections or 7 projections or whatever. And then you could get a huge trade. But you kind of have to be ready for it, and you have to be patient. And you can't get caught off guard. It's not easy. Alright, let's go ahead and screenshot that. Okay, I'll see if anyone's watching. If there's people watching, I'll keep going. Otherwise, I think I'm just going to end the stream. I just want to be done. There's only one watching. Okay, I'll probably end the stream here. Nice 2022 model there. 1159. (2022) model on the 32nd. All right. 11:59. Bang. Okay, saving that. Can you explain to me what equilibrium is? I always see people using that word. I have no idea exactly. Yeah, of course, bro. I got you. So equilibrium, basically what you are going to be looking for is, so what will happen is market this, it's specifically for the 2022 model, like TGR's model, essentially. When we break out an old high and then we come back to equilibrium is going to be like a really, really optimal entry point for the trade. So let's say that we have a range, we sweep out old lows here, and then we all of a sudden get aggressive displacement to the upside off of these old lows. Well, we want to see a fair value gap form around equilibrium of that displacement. Now, it doesn't always have to form at around equilibrium of that displacement. It could be, it doesn't have to be. But if it does form at equilibrium, so for instance, let's say we get this displacement. Jake, how did you do today with trades? I just traded on paper, but I did good. I caught some good paper trades. So boom. Displacement, obviously breaking out old highs here. And so now, let's say that there's a fair value gap that forms around the equilibrium point of this displacement leg. You want to measure out the displacement leg a lot of the time. Rarely I've seen the manipulation leg be good for it, but usually it's the displacement leg that's what you want to measure out. And you're going to want to get your Gann tool, switch it to these settings, so screenshot it if you want. But basically this is going to give you the midpoint of any given range, measure out that displacement, and when there's a fair value gap here, this fair value gap at the midpoint. So equilibrium is essentially the midpoint. That's essentially what it means. And if there's like a gap that forms around the midpoint of a move higher, that's going to be ultra sensitive. So that's all it is. It's just the midpoint of a price leg. It's the midpoint of a price leg, and it's specifically used for like TGR's model, for the 2022 model. And so yeah, so then let's just say that we come back down, pop down into this fair value gap. Okay, cool. This is at around equilibrium. That's an additional confluence for us. Now we take this higher, right? And so you can see this happening in the market all over the place. I can find you an example real quick here. Let's just go look around. So this one would have been a great example, but we actually don't even use equilibrium. Once again, sometimes the market will get so much displacement that we don't even need to come to equilibrium, which is the case here. But this would have been a great example if it had came to equilibrium, of equilibrium being a confluence. You can see it came just short of equilibrium, but if it had came to equilibrium, this would have been an additional confluence for the short. Because once again, we had a sweep of equal highs, a break of a low, and then we came to equilibrium. But here you can see we came just short. I can find you a better example, like this one, right? This one's probably pretty good. We probably had SMT. So that's why we don't end up sweeping this low, is because we have SMT here. So we have SMT with ES, meaning NASDAQ actually doesn't need to sweep the low. We can just utilize this rejection block. And then we break this high. And then once again, we come, once again, just short of equilibrium. Usually this does not happen. We'll usually come to equilibrium, but you could have also used equilibrium of the manipulation leg, and you can see how equilibrium of that was nice. Midpoint of a fair value gap. Midpoint of a fair value gap is different. This is for midpoint of a price leg. Midpoint of a move high from a swing low to a swing high. It's the midpoint of that price leg, and midpoint is going to occur at that same area of a fair value gap forming. It's not necessarily the midpoint of a fair value gap. It's just that you want to see the midpoint of that range of price from the low to the high of that price leg. You want to see a fair value gap occur at that same point. So midpoint of a fair value gap is different. Midpoint of a fair value gap is like this. Like midpoint of a fair value gap is like trying to find a good example. Hold up. Midpoint of a fair value gap is like okay, this isn't a fair value gap because it's got volume imbalances, but still, let's just say we're using this as a fair value gap. Midpoint of a fair value gap would be like this. Midpoint of a price leg would be like you measure out the entire price leg. So like from, hopefully I'm not explaining this too bad. Whatever, it's okay. Midpoint of an entire price leg would be like an entire leg from high to low, like this. Like from this high to this low. Versus midpoint of a fair value gap is from here to here. So midpoint of that is right there. But midpoint of the entire the midpoint of that entire range of price is right there. And this time we actually go to deep into premium. We actually go to OTE. Anyway, I could get way more into that more later. I mean, it probably wasn't the most perfect explanation, but I think you're getting the idea of it. So anyway, I'm going to end the stream. Thank you guys so much for watching. And yeah, I will see you guys in the next one. Thanks once again, guys, for all your support.